Todd Bubba Horwitz is back. He is a chief market strategist of BubbaTrading.com, and we'll be talking about everything to do with his trades, his favorite trades of the year, his favorite trades of the week, and his least favorite trades of the year, equally important. Welcome back to the show, Todd.
David, it's great to be with you as always. It's always a pleasure to be around you.
Great to have you on Kitco. Great to host you. And let's recap what happened this week with data first before we talk about what's next. So as you know, we're speaking today on Friday. CPI data came out yesterday, 6.5%. CPI has been on a downtrend for many months. In fact, President Joe Biden came out and made an announcement, and he was telling the American people that he has good news. Inflation has been coming down. Technically speaking, he's right. Inflation has been coming down, but is it too early to say good news right now?
Well, I'd like to put it in the terms I would normally put it in, but I'd be bleeped. So what I will say is that's garbage. It is not factual. It is not true. And 6.5 is a ridiculous number because we're still well over 20% at true real inflation. Unfortunately, the numbers, the way that they are quoted not really accounting for a big percentage of food and energy. Okay, and I'm telling you this, that the average person, the average family spends more on food and energy than they account for, and that's why the number is coming down. But at the end of the day, eggs are $8 a dozen. A loaf of bread is, I saw, $5 and $6 for a loaf of bread. The only thing that has come down recently is the price of oil. And that is very suspect whether or not that's going to stay at these low prices. However, the price of oil is still 50% higher than when President Biden took office. So I call those numbers garbage. They're ridiculous, and they are an embarrassment to report, let alone an embarrassment to celebrate, because they're wrong, and the average consumer is struggling to make a living.
Eggs are $8 a dozen? Where do you live, man? What happened?
In Chicago and in Las Vegas, eggs are $8 a dozen.
What happened? How did this happen?
Well, they're blaming it on the bird flu, but of course, remember, when you see the food in the grocery store, it just didn't get there by magic. Either the chickens were raised to produce the eggs, or the wheat had to be grown to create the bread. And again, I would not be surprised at some point this year we'll see a $10 loaf of bread somewhere.
Yeah. What does this mean for wages, though? I mean, if I'm paying $10 for a loaf of bread, but my salary goes up 3 times, I mean, I'm not complaining, right?
Yeah, but whose salary is keeping up with the inflation or the hidden tax that the government likes to put on you?
True.
Okay. Again, I can give you a very factual statement that I made a lot less in 1985 than I make in 2022 or 2023. And I can tell you that what I made in 85 was a lot wealthier than it is in 2023. So that our wages never keep up with the rising inflation, the rising taxes, and the hidden taxes that government likes to put on us by bailing out banks and by bailing out ridiculous companies that should be let to go bust.
Okay, so before we talk about investments, let's talk about what should be done to fix this problem. So like you said, factually wrong that inflation is not a problem right now. 6.5% was the latest headline number. Let's just assume this is the accurate number. We both know that it's probably higher than 6.5. Well, it is. But let's assume that this is the accurate number. What should be done to bring this down?
Well, I mean, the first thing you have to do to bring it down is you need to go back to producing your own oil. The big swing pin or the big hedge pin in here is the cost of oil. Because not only does the cost of oil cost you at the pump, but it costs you at the supply chain because of the delivery. Remember, that stuff's got to get delivered to the store. Farmers got to use a lot of oil to make production. So it's an event that if you had your own and weren't dependent on paying what we're paying, and yes, we're only paying $76 a barrel, $79 a barrel as of right now, but we're going a lot higher. Because you don't think Saudi Arabia is going to sit back. They're going to do what they did in 2004 and 5 and put a squeeze on the oil once we're all back and comfortable. You can have a green environment all you want, but you cannot break your supply chain nor break your people trying to get there. So the cost of producing all these goods is dramatically higher, and farmers are struggling because the margins are shrinking because of the input costs and that they can't raise fast enough to keep up with it because the average consumer cannot afford it.
If the average consumer cannot afford to maintain their living standards, what is the average consumer going to do? Most people can't just leave the United States. What options do they have? What changes in their lifestyle will we observe over the last 5 years, or over the next 5 years, rather?
Well, if this continues, we have to tie one more thing into this: the Federal Reserve hiking rates into a recession. You can call it a recession or not. I call it a recession, but the Fed hiking rates. Okay, so as we look forward, what's going to happen? Well, people eat protein. Well, the number one protein that people like to eat would be, red meat, steak. Now, obviously, you're a vegan or vegetarian, it's not your choice, but in general, that is the delicacy or the top of the line. So the next step is they start eating pork, because that is the other white meat that is also protein. And if that protein doesn't hold them, then they go down to poultry. Okay. And they go down the line, because you do need protein in your diet. So that's why you're seeing the cattle markets and the hog markets in these ranges that have been basically circling around a band, depending on what the price of oil is. So if oil continues to rise, then I would suggest cattle will go lower and hogs will find a stabilizing base if they can still afford that. Again, it's going to come out of the amount of driving you're going to do, which is going to slow down the sales into independent retailers. There's a whole big chain of events that are going to be affected here should this continue. And unfortunately, we can't get people to go to work, which is another problem, because we've lost 2 million full-time jobs since last May. And you can't even get people to go to work at McDonald's for $17 an hour, which is about double the minimum wage.
I think your point on lifestyle change is a very good point. I think philosophically speaking, from an investment standpoint, maybe we should be investing in cheaper substitutes, right? Invest in poultry companies, and don't invest in Mercedes or invest in Toyota. Buy Toyota or GM stocks or Ford stocks. Don't invest in REIT companies with fancy condominiums. Invest in REIT companies that have a lot of cheaper homes. I guess invest in dollar stores, Walmart. Yeah.
I listen. I think that's a very good point. I mean, in fact, one of the things I liked a lot was campus rentals, right? Because the colleges are going to be open and kids are going to need a place to rent, and of course, those are very profitable places. But yeah, of course, you need to look at what the environment's going to support. At some point, the stock of, let's say, you use Mercedes, at some point that'll become a value issue if it gets cheap enough. And then, at certain prices, things are value, but you always have to be able to weigh the value of the company and the value of the company is going to be, and project out years in advance. And the biggest thing you want to project when you're investing is that company going to be in business 10 years from now? That's what you're really concerned about, because again, if we use just the basic metrics of the stock market, it has gone up 8.5% year over year since the inception. And I don't expect that to change, because again, America is a very strong country. And because there are elections every 2 years, there can be some dramatic changes to the policies that are being established.
Okay. What about, before we talk about the election now, what about personal finance? Now, investments, we've talked about your investment philosophy long-term. What should people do from a personal finance standpoint? Fed's tightening into a recession, has never happened before. Things are looking bleak. What should people do now?
Well, I listen, I'm a big believer in being in the stock market. I'm always 100% invested, basically, and I'm using derivatives to protect, hedging to the downside. But what the average investor has to remember is, when you're investing in anything, invest money that you're not going to need tomorrow. Okay. Invest money that you're not going to have to go back and pull it out later, because if you really need that money back at some point, you're not going to get anywhere near the value that you put into it, because if you're selling it, you're selling it at a loss, you're selling it at a distress. And too many people have the habit of over leveraging what they think they have based on what they have in their pocket today. And I think it's very important to understand that when you invest, even like in gold and in silver, when I buy physical gold, I'm not buying it with the intention of selling it higher. I'm buying it in the intention of holding it forever, because it will continue to appreciate. The same in a stock market, which is why it's very important when you invest in a stock, not trade, but invest, that you believe that company has a period lifespan of 10 years or longer, so that it has a chance to grow and go through the market cycles, because no matter what happens, if the country survives, the good companies will be right there with it.
Okay. And in terms of people surviving right now, higher inflation, higher interest rates, higher mortgage payments, higher debt payments, what's your advice to the average person right now who just wants to get by? Let's say he doesn't even have money to invest.
Well, I think my advice is to be very careful. I think my advice is, if you're a Starbucks goer, if you go 5 days a week, go 2 days a week. Okay. You have to start to save money. You have to start to put away, because again, this does not look or appear that it's going to end anytime soon. We have a lot of problems in this country, from civil unrest to, people not working, to people that don't want to work, to people living at their homes. You have to start to save money. That big thing is, you cannot allow yourself to get into credit card debt, because the rates that credit card companies charge you are called usury rates. Okay. And they're basically against the law, except that the credit card lobby is so strong that they got around those. And you can't even bankrupt on a credit card company. And you just have to be much more conservative at what you do. So if you like to have a couple of beers a week, well, cut it down. Whatever you like to do, you're going to have to cut down, because you need to build an emergency fund, because if something else happens or another thing hits the fan, you need to be prepared for it ahead of time, not chasing it later. So if you have debt on a credit card, for example, before investing, pay the credit card debt, because you're not going to make 22% or 25% on your investment, but you are paying 25% interest on that credit card.
Usury rates. You're saying that there's a certain limit. Interesting for me to know. There's a certain maximum interest rate limit that credit card companies or any financial institution is allowed to charge you?
There is supposed to be, correct. This is the loan sharking business, and there's supposed to be rates, but they always figure a way to get around it. But it's a very tricky model, and I can't give you all the statistics or data in a short period of time, but it's very tricky. But trust me that you're paying in the mid-20s on a credit card if you're holding credit card debt and you're past due. You're paying well into the 20s, which I consider usury rates. Nobody can afford to pay that kind of interest. They'd go broke.
Right. Yeah. Well, hopefully, people talk about this period being a prolonged recession. You said these problems aren't going away anytime soon. During the pandemic, we had businesses go bankrupt or shut down because they were forced to do so. This time, people are talking about people going bankrupt out of their own. I guess the governments are shutting them down. They just have to, because they don't have any business. Is that going to be this bad?
It's going to be worse. This correlates directly to the administration that's in power right now. They have single-handedly destroyed small business, because a small businessman or woman cannot compete in a like business with somebody else because of their cost of goods and services and help, because they don't have enough revenue to create that. And this is all the policies that we've seen put into place since Joe Biden took office have been detrimental to the very people they're supposed to be supporting, which is small business. From the shutting them down during COVID, the independent pharmacy, the independent grocery store, they can't compete. So how can they be in business against the big guys when they can't compete on price, on help, and on service? So they've really done a number on small business and allowed Walmart and our Amazon to grow much larger, which is a very big problem in my opinion.
Why did Walmart and the big box stores stay open during COVID, yet the convenience stores were closed?
They were considered a necessity, which is total BS. Walgreens, Walmart, they were allowed to be open. And most people, if they have the choice, would prefer to go to their small independent pharmacist, for example, because the small independent pharmacist knows them and knows what effects some of the drugs that they may be getting prescribed would do to them. And they did not allow that to happen, which is, it's an American tragedy to what they did to the small economy and the small business and to the middle class in this country. And it's only getting worse. And of course, we heard the speech that there was going to be no new taxes if you make under 400,000, but suddenly we've got a new FICA tax, which is Social Security tax in the United States, which now is the balance is 160 instead of 100. So you're paying more. You're paying another 10% on $60,000 that you weren't paying before.
You said that there's a lot of problems in this country. Let's list them out. If you were speaking directly to members of the White House right now, let's say they're watching this program, speak directly to them. What are these problems that need to be fixed?
First of all, they got to eliminate the lobbyists and quit stealing all the money. Okay, they got to quit voting themselves a raise. First they voted themselves a raise during COVID. Now they voted themselves a raise in that big 1.8 trillion bill they just passed. There's another raise for them. So while Americans in the middle class are struggling to eat, Congress and the Senate are taking raises. Okay, we have to get rid of the lobbyists so that we're not in bed with Saudi Arabia and China, and we take control of the world again instead of being a secondary citizen and letting Saudi Arabia and China run all over us. This lack of prescription drugs, this lack of power, this lack of control of your own resources. I mean, we have our own natural resources. You want to go to green energy? Fine. Give me a plan how you're going to get there. But you have not changed the carbon footprint one bit, but you've increased my cost at the pump by 50% since you've been in office. So that's what I would say to them, is to take the American people and put them in your best interest, not your own pockets, and quit lining them. That's what I would say.
Up here in Canada, our Deputy Minister of Finance, Chrystia Freeland, made a remark, and I'm paraphrasing her, that we've been getting, obviously there's been complaints that the price of gas is too expensive, and she said that, it's indirectly a good thing because it incentivizes people to drive electric and be cleaner. How do you respond to that?
I tell her what I'd like to tell her. I can't tell her on here because I'd be beat. But that's the garbage. I mean, you don't have a power grid that's going to support what you're trying to do. This is the issue that nobody wants to talk about. Every president in the United States, which, and I'll go into Canada as well, same thing, has promised to fix the infrastructure, and they have not done so. So without the infrastructure being fixed, you don't have the power grid that would support these electric vehicles. So you can't charge them. And it's funny because there was a story a couple of weeks ago out of California. Buy a new Tesla, but you can't charge it until overnight after 9 o'clock because there's not enough power. So you saw what happened in the Tennessee Titans football game. They couldn't start the game because they were using too much power to fight the storm. This is the problem. You can't get to green energy until you fix the power grid to make it better. So it doesn't make it better. And don't forget that the amount of carbon and fuel that it takes to build an electric vehicle is dramatic. It's not marginal. It is dramatic. There's a lot better ways to clean energy and to clean the environment than the way that they're going about it right now. But of course, that's their excuse, and it's drive less. It's all ridiculous from my point of view.
What does this mean for investments? The future looks bleak from a political and perhaps a socioeconomic standpoint. Do our portfolios also look equally bleak in our prospects for growth?
I think we look very bleak right now, but I think this is where you have to separate yourself from, are you an investor that's willing to hold for the long haul? Because again, there's an old saying, you can't time the market, it is time in the market. Okay. And again, if you're doing your due diligence and finding good, solid companies, okay, that are going to be in business, let's say Apple, IBM, whatever, okay, they're going to be in business. They're going to survive. And the historical data through all of the troubles in the country we've had over the years, from the 1987 crash, from 1929, wherever you want to go, pick any period of time where we had economic strife, but yet we've always come back and grown. If we stop growing, there's much bigger problems, and your investments will be worthless anyways. So you have to be able to set aside the emotion of the swings that we go through in these markets and forget about it. And that is one of the biggest tragedies about technology, is that people continue to check it every day. They're checking their 401k on their iPhone, but you're not selling it. Why are you checking it? You're driving yourself to be in insanity. Forget about what's going on. The historical data, 8.5% year over year for 200 years. That's it. That's where I stop.
Yeah, people's 401ks got really beat down last year, hey?
Well, yeah, because the NASDAQ was down 33%.
Yeah, so that's a good point. So what to do for retirement? Should I put my money in a 401k? Should I trust the pension managers? I don't have a choice. I'm not a fund manager myself. Let's say I don't know how to manage my money. What do I do?
How old are you?
Well, I'm 32, but let's assume I'm okay.
Give me an age. If you're older, if you're 60,
I'm 65. Let's say I'm 65. I'm going to retire next year. I got some money in the bank.
Today, I'm taking that money and I'm putting it in. You know, if I'm afraid of the investment community, I'm putting my money in short-term CDs, which now are paying rates in the 4.25%, 4.5%, 4.625%, 3 month, 6 month, or a year CD, and I'm taking 4.5% to 6% off the top. That is guaranteed from the FDIC, and at least I know that I'm not going to suffer through what the stock market does.
What about if you're a younger guy like me and you've got 30 more years of
keep investing,
career?
Keep putting it in the stock market. Don't keep putting it in gold, silver, the stock market. There you can take higher risk. You've got earning power remaining. You're a young guy. If you don't have to sweat it out because your earning power is longer, right? I'm 65. My earning power continues to dwindle each and every year. Yours is still growing. You're still peaking. So a younger person can be more aggressive to investing, but still do the same due diligence. As you get older, you want to make sure that money is going to be there because you no longer are adding to your portfolio. You are either staying even because you've made good investments, or you're subtracting for the cost of living.
But should I put my money away? Let's say I'm working at a company. Should I put my money away in a company RRSP or a TFSA or a 401k? I should.
100%. As much as you can.
Okay. All right.
As much as you can. In fact, if you were one of my kids, I told both of my kids, one's a financial advisor, the other one has a 401k, and I said, take the max, not only in the 401k, but max out your IRA every year as well, because that is tax deferred or tax free, depending on how you want to do it, money. And again, if America is going to survive, which I have no reason to believe it's not going to, then we're going to see the same typical gains over time. And if you're 30 years old, 8.5% year over year over 30 years, you go by the rule of 72, that money doubles every 9 years or so. You're going to have a lot of money by the time you get to be 50.
Great point. Good advice. Okay, so sectors that you like, let's start with the sectors that you do like right now. Stocks, well, you said commodities, right, will do well. What about?
I love commodities this year. I think commodities are going to have what they call a big market. You know, I think we're discounting too much that there's not enough food, and I don't think there is enough food. I think we've discounted these commodities into too much of a depression. I think that they look great, soft commodities. I think gold and silver look great. I mean, gold, I think, is going to make a new high this year. And silver, you know, obviously silver's got a lot farther to go. I think this is going to be a big year for platinum as well in the stock market. I'm not a big fan of any real sector. I think it's a stock picker's market. I wouldn't be strictly looking at a sector, but I would stay away, in my opinion, from the housing side of the markets, because if you look into housing with interest rates higher and rising and mortgages now at 7% and 8%, I think it's going to be a tough road to hoe. So I would certainly stay away from the real estate for now. I would continue to play in the energy field, because I think that energy is going to explode. But then I would go into the stock picking, you know, looking for companies that make money through tough times, which means they should also survive and thrive during good times. And just take an Apple, for example. I mean, Apple's going to make money. They're not going anywhere tomorrow. Microsoft's not going anywhere tomorrow. Yeah, they might go down, but the company's going to be there. And I use the simple example: if you to put $10,000 in AT&T, which is as conservative as you can get in 1990, it's worth over a couple of $1 million right now. So that's what you want to do.
Do you believe that stocks are a good way to hedge against inflation? If you believe that businesses have to raise prices to keep their margins high?
Well, I don't think a pure stock is a hedge against inflation. I think that the money that you make is the hedge against inflation. In other words, if you're holding $100 bills, those $100 bills don't gain. They're actually a depreciating asset when they're sitting in your hand. They have to go into something that can create more and make that 100 look like 200 at some point. And that's, you know, the only true hedge against somewhat of inflation is probably, you know, the metals market. Okay. But again, that's always subjective as well to currencies and other things that are going on. But from a personal standpoint and from an inflation standpoint, your money must be working somewhere that gives you the opportunity to grow it without working, because you are holding a declining asset because of the power of the central banking system around the globe.
You said that you don't like real estate right now. Should we sell our homes right now? Let's say I've got two homes, one to live in, one to invest in. Should I sell my second one?
I wouldn't sell unless you need the money. Now, again, this is I'm not an advocate of ever going into a dumpster fire sale, right?
Okay.
I don't think that you want to sell assets when they're breaking down. You want to sell assets when they're going in your favor and you're realizing capital because you have somebody else to invest that capital. But if you're holding a home and you're not mortgaged to the hilt on that home, or you have a mortgage at 3.5%, not 7%, I would never sell that house. Okay. In fact, quick story, I do own two houses. I actually own three, but I own two that I use. Mm-hmm. And I owned them all free and clear. But when rates were down and I could get 2.5% money, I borrowed every dime I could out of each one of them because I knew that, I didn't know, but I felt rates were going to rise and I can make a lot more than the 2.5% than paying the bank. So I would never sell. If I own debt at 2.5%, I'm not selling any of that. I'm holding that because 2.5%, the current rates are 7%. That's a 4.5% benefit in my favor right off the top.
Yeah. Okay. Well, you didn't lock in those rates, right?
I locked them in. I have that money. I'm locked, and I don't get floating rate loans. I took confirmed numbers that I had. The last mortgage I took, which was a house I bought with my son, it was 3.25. Okay, and that's it. And I wouldn't pay it off. I could pay it off. I wouldn't even pay it off. At 3.25, why would I pay that off? I'll keep the money. I can make more than 3.25 off that money than I can by paying off the loan.
Wait, so you said that you would never sell your home. Does that mean, are you saying that over time your home would always appreciate? That that's saying that homes never lose value over time. Is that true?
No, I don't think that's true. I think, but if you need a place to live, now I'm not a real estate investor to create a revenue.
Sure.
But certainly when this market collapses, and I think it's very close to collapse, the housing market, I'm certainly not going to be adverse to buying a bunch of property that I will eventually flip when the markets turn around, as we did in 2008. But again, if you're living in a home, why sell it? You're going to have to replace it. You need someplace to live. Okay, if you're having a rental income, is the rental income property making you money, or is it at worst breaking even? Because if you have a mortgage there, if you're at worst breaking even, you're still building cash into a longer term investment that you're going to own because you are paying off the mortgage by the renter paying the rent. So again, you have to do everybody has to do their own individual finance on what it means to them. If I have a negative cash outflow in my real estate, I may have to look to sell some of it because I don't want the negative cash flow.
All right. Final question, I'll let you go, Todd. You've been in this market for 3-4 decades. Tell us about the biggest mistakes you've made in the past that you wouldn't mind sharing with our audience that maybe people can learn from.
Well, I think one of the things is we have a tendency to get too concerned and try to time the markets. Like, my opinion is I think the markets are going way down, but I won't short them here. But I have in the past tried to force my opinion upon the markets, and the markets don't care what my opinion is. The markets are going to trade by the system. I think that you have to stay away. And things that I've done is taking bigger positions than I should. I put myself in too much leverage, which then forced me to liquidate some stuff. And in fact, I'll give you one quick story. In the 90s, my partner and I were short out the nose all the internet crap. Remember, if pets.com, up a gazillion, whatever it was, they were all worthless. We knew they were worthless. Right. But in 1999, we had to make a decision. Do we want to take a chance of going broke and out of business? Okay. Or do we want to just absorb our losses because they weren't breaking at the time and move on and just make the money back later? Well, we chose to take our losses. And of course, if we would have waited, we'd have made a fortune. But again, you can't. That's where the leverage, when the mental side of trading or investing weigh too heavily on you and it affects your sleeping pattern, it affects your life, it means you're over leveraged and over invested in the market. And you don't want to force yourself to make those decisions, no matter how much you think you know.
It's funny when not funny, but I mean, I've just observed that people with wisdom and actual experience pretty much all agree with you. Whereas if you go on Wall Street Bets, it's mostly younger traders. They're doing the opposite. They're being degens, in their own words. They reward people they reward each other in the community based on the amount of risk that they take. People who are over levered brag about it and they show their margin account, and that's being upvoted. There's this culture right now of excessive risk taking being macho, which is prevalent.
Let me give you a final note on that. Okay. That is another sign that this market is getting ready to collapse. Okay. That is one of the biggest signs you will ever see. When you see that and you hear that, that is another nail that's being put into the coffin of this market.
You said that you knew that things like pets.com were worthless. I mean, they were, but how did you know that? What signs did you look at?
They didn't make any money. One thing you have to know about a company, they got to make money. Okay. At the end of the day, if they don't make money, they can't pay their stock. They can't pay their shareholders. There's no reason to own their stock. You have to at some point in time make money. And none of those internet stocks have made money. That's why most of them collapse, with the exception of a few. And this is always the case. When it comes down to it, there's not the old economy, new economy. There's one economy, and the one economy is that you have to make more money than you're spending or you're going broke.
All right. Well, Todd, very good talk. Thank you for your analysis. Thank you for coming on Kitco. I enjoyed working with you, and best of luck in your trades.
David, thank you so much. Have a great day, and Happy New Year to you, my friend.
All right. Thank you. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.